There are so many challenges for first-time home buyers right now in 2023. As you know, the high interest rate environment, not enough inventory, the price isn't really coming down that significantly. But one of the biggest challenges is to save enough down payment and closing cost. So for example, like a median price of a Portland metro market, $500,000, try to save that 5%, that's like $25,000. And then you got to have another $10,000 for the closing costs. So we're talking about $35,000. A couple or a young person who's just starting out may not save that up yet. However, is it a good idea to buy with a low down payment or not? That's not the one that I'm going to talk about today. Today, I'm going to talk about where to find some government subsidized or home buying assistance, a down payment assistance, or below market mortgage rate loan programs. Hi, my name is Shawn. I'm in Portland, Oregon. So where do you find these loan programs at least, or the down payment assistance program? I have two very simple steps. The first one is you just need to open up a Google and search in your city first home assistance program, or in your county assistance program, or in your state home buying guide or home buying programs for first time buyers, and you can do some Google search. It sounds very simple and anybody could do this, but it can be kind of tricky to find your own local programs because I find that most of the search results are commercialized company, like sponsored ad and paid, one of those top three. You need to avoid those first of all. The second step that's more important is to avoid those .coms or sponsored links, because they're going to be private companies. They may sound like there was actually one that says FHA.com. That is not the government website. I just want you to know. All the government websites have something .gov. Most likely it's going to be .gov, and then .org is going to be maybe some private but non-profit organizations can only have that extension. So that might be one of the most important things that you have to remember. At least about a dozen links that are actually active links that I found, especially for Oregonians. And I have a few national links too. And then I'm going to give you basically a way to search in your town, county, or state. One other thing that you have to remember is that not all the loan officers are going to have the access to these government programs. I think one of the reasons is that they need to be applied to be that pre-approved vendor for those programs. And as well as I was told, some of those loan programs, profit margin is not that great. Regular commercial lenders, they don't carry or they don't qualify for those loan servicing programs. So for example, like USDA loan, which is if you're buying a home outside of metro, they call it the rural real estate, USDA. It's 100% financing. So you don't actually have to have a down payment. For example, in the Portland metro, you may have to go to like Forest Grove, some part of Sherwood, possibly some in Canby. So it's outside of the metro areas. Now, if you talk to about 10 lenders, out of those 10 lenders who can serve the USDA loan might be possibly just one. So the best way to do it is find the right links and go to those websites directly so you can find exactly who are servicing those loans. That's going to set you apart and you're going to save a lot of time. Hopefully, the monthly payment and interest payment of the length of the loan. So you're going to save a lot of money. If you put your homework in the beginning and know what to search and what not to click on, ultimately get some of those loans and make sure that you compare those loans as well. Don't just trust one lender. At least I will get estimate for like 3 different lenders who offer some of those subsidized programs. So you always have to shop around no matter what. And the other thing is, if their estimates and what they're saying is kind of fishy, if you don't get a good gut vibe, just be ready to walk away even during a transaction. In Oregon, for example, as long as the seller agrees, as a buyer, in the middle of transaction, after offer is accepted, you can still back out of that lender and change the lender as long as the seller can agree. Better if you can actually find the right deal, right loan program in the first place. So make sure to shop around, compare them as much as you can, understand as much as you can, and try to find this assistant program, and that's going to set you apart and save you a lot of money down the road and monthly. In 2023, one thing that I see, another thing is that commercial lending, just traditional lending institutions like the mortgage brokers, those companies, they come up with this very unique program saying that you don't have to have a certain amount of down payment and we're going to pay that. Something is free. And then you can do that, buy down rate, and then turn into an adjustable mortgage rate in 3 to 5 years. You have to be really careful with those. First thing that I would avoid is, I think I mentioned this before in other videos, but try to avoid adjustable rate mortgage. Just stick with fixed rate because you're betting on interest rate going down, and select an adjustable mortgage rate. And if the rate goes to the opposite, if it goes up, you might get in trouble because your mortgage right now might be 5.5% because you bought the rate down and, saving money for now. Right now, it's about 6.5% for 30-year loan. But if that rate goes, let's say 8%, your adjustable rate will jump. And that's kind of one of the reasons why in 2008, the real estate market crashed, because of subprime loan adjustable monthly payment jumping really high. So stick with fixed loan, and there's nothing free when it comes to private lending institutions. They'll make these programs to make it look very attractive in the first place and the next few years. But if you look at the fine line, you may actually end up paying quite a bit of money. And also, I'm a little bit wary about just thinking about refinancing down the road when the rate comes down. That approach can be really dangerous, as I mentioned, not just because of the rate going up the other way. When you refinance it, you basically lost all the equity building until that refinancing. So you have to start it all over again. So in 2023, you got, let's say, 5-year adjustable. And in 5 years, 2028, if you refinance that, you're starting the clock again for 30 years. And then typically the first 7 years or 8 years, you paid most toward the interest payment. So whatever you paid is kind of wasted. AKA the bank made a lot of money from that. So I'm not a big fan of that idea. It's better to get a fixed rate, get the as best deal as you can get right now, possibly using some of these first-time homebuyer assistance programs, so you can at least get a good, comfortable budget loan that you can hold on to for 10 years. Then whether the rate goes up or down, it doesn't matter. You're going to be just fine. So that's what I would recommend. Just buy a smaller home than your expectation. And I'm kind of going into this your uncle talk type of situation, but that's, I think, smart thing to do rather than using commercialized incentives, but they're not really incentives. They make money some way. But the government programs, they're actually can be really good. For example, like 2008 and 9, when the housing market was crashing, the government gave like $7,500 and $8,000 in 2008 and 9. 2009 assistance program, you didn't even have to pay back. So it was like free money in some sense. So if you search for them, there are certain cities, for example, like Beaverton, down payment assistance program. That kind of program is really good. And not every cities have that, and there's a limit to those programs, so you need to know where to search and who to ask and where to get those loans. Search suggestions that I just gave on my link on my website, and avoiding .com and all the sponsored and paid advertisement, just go ahead and skip those because they're going to waste your time, because they're not going to offer those directly. They're going to put some kind of margin or put their own programs into it. So go to the .gov or .org. Yeah, that's all I have for today. Make sure to shop around, search as much as you can, understand the loan, be ready to walk away if your gut says no, and don't overbuy all over the place here. But I think you got my point. Thanks for watching, and I'll see you next time.